Hello, friends. Very good morning. So, today I bring a new topic which is Oracle record to report process. So, basically, I'll give a brief about this process. What does this process, in every ERP, right? Be it your Oracle, be it your SAP, JD, HAD Edwards, your PeopleSoft, every ERP will have this process record to report. Basically, what this process depicts the business functionality in terms of the ERPs, what they do and how they do. Today we are going to see in this particular session. Okay. So, recording. First of all, what does record means by? Every ERP will have definitely there will be a main module which is your general ledger module where your accounting of the transactions happens, right? The recording of the transactions happens, and you will have various sub ledgers, modules. It could be your payables, it could be your receivables, cash management, your fixed assets, tax module, inventory, your procurement and so on. You'll have number of modules across the ERPs, right? So all these subledger modules, end of the month, basically we record the transactions, we do the create accounting and transfer it to the general ledger module. Okay. And once you transfer all this data from the subledger module to the general ledger module, what happens is that you'll have to post this, journal entries into the system, right? There is a subledger engine is there where it's get, triggers your accounting entry events from your various subledger modules and gets recorded all these, entries into the general ledger module. So what happens is that the moment it get posted to the general ledger module, it updated the balances normally. Okay, whenever it has not been posted, it will not update any kind of accounting balances actually. Okay, the moment it updates the accounting balance, your balance gets updated. From that, I think we can draw those reports particularly. Okay, I'll come down to the reporting part later. Let us understand how the entire mechanism or could be the architectural process works. Okay, so if it is like normally what happens is that in the month end, we do all the closing process of all the subledger modules, and finally we post the journal entries into the GL and close the general ledger module. And before that, right, you could there could be reporting the ledgers also. Possibilities are there, you should have kind of a reporting ledgers also, maybe a different currency. So if you are reporting across the border, across the country for reporting purpose needs. So let us first try to understand the local reporting needs actually. Say for example, I am from India. Okay, if you are from India, you'll have to report in the local gap. Okay, local gap, general accounting accepted principle. As per that, you'll have to report your financial statements to the key stakeholders, which includes your government, your internal and statutory auditors, your key management stakeholders, which includes your board of directors as well as your investors. So basically, these are three, four, five elements. Key stakeholders will be there who will be eyeing on your reporting requirement of a particular company in the process, right? So what happens is that once you do the period close, you try to run your trial balance, you try to run the profit and loss statement, you try to run the balance it out of all these, general ledger accounting, module. After that, what happens is that once if you have if it is a multiple current country representation, if there is a country worldwide, if it is a global company having business process across the countries, normally we report that in IFRS accounting standard. So every country they can report in the local gap as per the country specific needs. If it is a international a customer like international a company which engaged in various countries or the continents, they will be reporting in the IFRS. Basically, what happens is that every country will have a local currency related reporting, right? So that we normally, convert the data into US dollar, but particularly when in terms of IFRS reporting. So what happens is that from INR, I'm from India. Say for example, India there is a company, right? It report happen in INR, Indian rupee. Then you convert that balance to the USD. Like similarly, every company for Singapore you have SGD. From SGD I will convert the data end of the month, end of the year. I'm going to convert the data to the USD currency for my international reporting purpose actually. Okay, so let us understand what this I've already briefed about this Oracle record to report process. So what is the definition of record to report process? We'll try to figure it out. Okay, record to report is a finance and management process which involves collecting, processing, and delivering relevant, timely, and accurate financial information to the key stakeholders. Okay, so key stakeholders could be your government, your local authority, it could be your internal and statutory auditors, which I have mentioned earlier, your management body, which includes your board of directors, and your investors who actually invested money into your company. What is the key elements out of the record to report process? Just to understand, it's more of like a financial data reporting as per the country specific, the accounting standard as per the country regulations, which includes your gap and IFRS. Okay, so what happens is that in a broader vision, if you try to understand the record to report process, right? As I mentioned earlier, your GL accounting, right? GL accounting is going to happen post your subledgers. All your subledgers has to be closed and posting has to happen and transferred to the general ledger module. Once this is done, your GL accounts gets closed, then you do the closing of the books, which is your next. After that, I think you can do the consolidations. Once you do the consolidation, if it is of a different level currency for the consolidation purpose, or if you have different ledgers within the country itself, you'll have to do the consolidation process. And finally you do the after the consolidation you'll have to do the reporting. So reporting could be stand out as your P&L statement, your balance sheet, your trial balance, your cash flow statement, and whatnot. There could be budget and versus the expenses analysis report. And there are so many reports, financials reports. Normally the key stakeholders could interested out of it. Okay, let's go down to the next chapter. So more of like this is record to reports, in detail level, like what are the key stakeholders reporting requirement. Starts with, if you see the orange color, right, this is the process: record, close, consolidate, and report, right? So in the recording we normally do the transaction processing of across the subledger modules. In the close process, the general ledger has to be closed, and non-financial informations you can figure it out what needs to be, should not be a part of your financial close element. You can move those elements out. And after that you do the consolidation process. This consolidation process, normally if you have more than a primal ledger, one primal ledger, and multiple, there could be possibility you can have a multiple primal ledgers and legal entity within that particular country to report, and across the country also. Okay, so both the scenario you'll have to do the consolidations, then finally you'll have to do the reporting. Reporting could include your internal and external reporting with respect to the as I said, your auditors, your key stakeholders. Then you'll have regulatory reporting to your like tax authorities, right? You'll have like the GST, the VAT. So it could be any kind of a government related regulatory tax authority that you need to report it out of it. Okay, so as I mentioned, there could be possibility that as which country you are presenting, right? As per that country, in that country you'll have your gap or IFRS. It depends, right, how you want to do your accounting standard, reporting requirement. You'll have to follow that particular country's regulations, accounting standard particularly. Okay, so who gets help out of this entire process actually? So this is more of like reporting requirement we normally do to the when you do the reporting to the different stakeholders, like the board of directors, the management guys, the management people, and the investors, right? And for the government you'll have a different kind of a reporting, which is your normally your financial reports, your tax reports, your assets related report. So there are various reports that we generate from the general ledger module. Okay, so this is, the overall process, record to report. I'll bring a new topic next time, for which is called your acquired to retire, which is part of your assets, fixed assets module. Do watch my channel for the next session. Thank you. Good day. Bye bye.